Let's talk about getting a massive advantage in one of the toughest real estate markets in Canada. We're going to break down how you can get your mortgage pre-approval in Vancouver and get it done in just 2 days.
So, imagine this. You're scrolling online, maybe late at night, and bam, there it is. The perfect place, everything you've been looking for. But here's the real question. If that home hit the market tomorrow, would you actually be ready to jump on it with a serious offer?
Because here's the reality check. The benchmark price for a home in Metro Vancouver is sitting at over $1.1 million. In a market like this, being interested just doesn't cut it. You have to be ready to go, because if you hesitate, you will lose out on that dream home.
And that readiness, that key strategic advantage, it really all comes down to one thing: getting pre-approved for your mortgage. This isn't just another box to check. It's the power play that puts you firmly in the driver's seat. So what is a pre-approval exactly? Well, think of it as a formal conditional commitment from a lender. This isn't just a wild guess. It's based on a real in-depth review of your finances, and it tells everyone, you and the seller, exactly how much you can borrow.
Now, it is so important that you understand the difference between a pre-qualification and a pre-approval, because they are not the same thing. A pre-qualification, that's just a quick estimate based on info you provide. It's basically an educated guess. A pre-approval, on the other hand, is based on verified documents, and that's why it's the only one that carries real weight with sellers and shows them you mean business.
And that power gives you some huge advantages. First, you know your actual budget, so you're only looking at homes you can truly afford. Second, you can lock in an interest rate for up to 130 days, a huge relief if rates are climbing. And most importantly, it screams to sellers that you're a serious qualified buyer, which strengthens your offer and can seriously speed up the whole closing process.
Okay, so how do we get this done fast? Look, this isn't about cutting corners. It's about being smart and, most of all, prepared. Let's walk through the 48-hour plan, step by step.
You know, the whole thing really boils down to 4 simple steps. It all kicks off with a quick consultation. Then comes the most critical part for speed, getting your documents together, which you should aim to do on the very same day. From there, your file gets matched with the best lender, and boom, within 24 to 48 hours, you've got that official approval letter in your hands. All right, let's zoom in on that second step, the document collection. Because honestly, this is the part where you are in complete control of how fast this goes. Having everything ready to go is the secret sauce for a quick approval. So let's dive into exactly what you'll need. First up, we need to prove your income. If you're an employee, this is pretty straightforward. You'll need recent pay stubs, a letter from your employer, and your latest tax docs like your T4s. Now, if you're self-employed, the bar is a little higher. You'll need a solid 2 years of tax returns and financial statements to paint a clear picture of your income. Next on the list, where's that down payment coming from? You'll need bank or investment statements to show the funds. If a family member is helping you out with a gift, you'll need a signed gift letter from them. And finally, some basics, your government-issued photo ID, and a simple list of any debts you have, like a car loan or credit card balances. Having this all in one folder is the key. Okay, so you've got your document kit all ready. Now, let's talk about the 2 biggest things lenders are going to scrutinize: the mortgage stress test and your credit score. If you understand these, you'll know exactly where you stand. The term stress test sounds pretty intimidating, right? But the idea behind it is actually pretty simple. It's just a rule that says you have to prove you can afford your mortgage payments, not just at the rate you're offered, but at a higher qualifying rate. It's all about making sure you won't be in trouble if interest rates go up down the road. Let me show you how it works in the real world. You have to qualify at either your mortgage rate plus 2% or the Bank of Canada's benchmark rate, and it's always whichever one is higher. So let's say a lender offers you a great rate of 4.5%, while you actually have to prove you can afford a rate of 6.5%. And that, right there, has a direct impact on how much you can borrow. Along with that stress test, lenders are also looking at what they call your debt service ratios. Your GDS, or gross debt service, is the percentage of your income that goes just to housing costs. They want to see that below 39%. Then there's your TDS, or total debt service, which includes all your debts. That needs to be under 44%. Keeping these numbers in check is absolutely key.
And of course, the big one, your credit score. A score of 680 or higher is basically the golden ticket. It gets you access to the best rates from the big banks. If your score is a little lower, say in the low to mid 600s, there are still options, but you'll be looking at alternative lenders and higher rates. And, well, below 600, getting approved gets really tough.
Okay, now this next part is super important.
Once you get that pre-approval letter, your job isn't done. You have to basically put your financial life on ice. Don't go finance a new car, don't open up new credit cards, and please don't change jobs. Your final approval is totally conditional on your finances staying exactly the same until you have the keys in your hand.
So let's put it all together. When you follow these steps, you completely transform yourself. You go from being someone just casually browsing listings online to a serious, prepared bidder who is absolutely ready to compete in one of the hottest markets in the country.
At the end of the day, it really just comes down to this. A pre-approval isn't just a nice-to-have. It's your ticket to the game. It's what lets you walk into an open house, fall in love with a place, and make a strong, confident offer that its seller is going to take seriously.
You now have the full roadmap. You know what documents you need, you understand the hurdles, and you have the strategy to get this done fast. You're a prepared buyer. So the only question left is, what's your first move?